Hi, today I am here with Terry Shank of Prosperity Home Mortgage to chat about the phenomena that happens when we know there's going to be an interest rate meeting, and one is coming up the first part of December. So I wanted Terry to talk a little more about how closely it's related to mortgage rates, etc.
Yep, so one of the biggest misconceptions is that they're directly related. Yes, the federal, them lowering the rates does have influence on mortgage rates, but we typically see that get built in the weeks leading up to the meeting based on projections and expectations. So if the feds are expected to lower the rates, we'll see that be built in 2 to 3 weeks in advance of the meeting. And then it's not unusual for after the meeting for something to be said by Powell or the feds that has them tick right back up afterwards.
Okay, so that makes sense. I think, again, it's just a common misconception that the Fed lowers rates and mortgage rates go down. I know Terry gets a lot of phone calls, but that's actually not what happens. So hopefully that was helpful and explains it a little bit more.
Have a great day.